to our latest quarterly investment update. My name's Alison Sinclair and I'm the Manager of Marketing Communications here at Vision Super. I'm joined today by our Deputy Chief Investment Officer, Tim Ridley. Welcome, Tim.
Hi.
Tim, it looks like we've had a strong start to the financial year. Can you talk about that and what might be driving our performance today?
Yeah, you're right, Alison. We've had a tremendous start to the financial year. We've seen strong gains in equity markets. A few factors have driven that. Firstly, the US economy has been quite resilient. We've seen moderate growth from the US economy. We've also seen inflation coming down, and that's a positive. And inflation coming down has allowed the US Federal Reserve to cut interest rates by 50 basis points, so 0.5%. That was more than was anticipated by the market. That helped to stimulate stocks, particularly at the end of the quarter. While we did see strong gains during the quarter, it was actually quite a volatile quarter, but we did see pretty good outcomes overall.
Excellent. We've got the US election coming up in early November. Are there any expected impacts to markets following this?
Yeah, it's an interesting one, Alison. There's a lot of uncertainty out there. We're not sure who will win this presidential election. It's very, very close. And some of the policies touted by both sides are relatively unclear in terms of what are the specifics. For example, Trump has indicated that he would raise tariffs quite considerably on a number of key economies like China. If he was to do that, that could push inflation up, push interest rates up, and be a negative for equity markets. But the key thing is there is a lot of uncertainty here.
Okay. So along with the US election, what other factors are investors currently focused on?
There are a few. The US economy is still quite front and centre here. The performance of the US economy typically has a large influence on investment markets, and that's the case today. In particular, the US unemployment rate. You might say, well, why? The US unemployment rate has become the focus for the US Federal Reserve. It's a key barometer in terms of how much it may cut interest rates. So we've seen the US Federal Reserve cut interest rates recently, and the market is anticipating further cuts because there's some deterioration in the US labour market likely to come through, and inflation is likely to come down, which gives the Fed, the US Federal Reserve, latitude to cut interest rates. So that's an important factor. A second factor is China. China's starting to stimulate its economy. It's had a few announcements recently. It hasn't announced all the detail that you need to establish what's going to happen, but they've announced something which is quite material so far and looks like it's going to be a positive for China in particular, and some spillover effects to the rest of the world, particularly the Australian economy may benefit from that. But there's still uncertainty about the magnitude of that stimulus. And the third dimension that markets are beginning to focus on is the Middle East. That hasn't been a focus of markets until the last few weeks, and we've seen the oil price coming up in the last few weeks, and that's been a negative for markets, but not much so far.
Thanks, Tim. It sounds like there's a lot we're going to be watching closely over the next few months. Thanks for sharing the insights today and for the update. For members, if you have any further questions around investments or your superannuation in general, feel free to reach out to our member services team here at Vision Super or log on to our website at visionsuper.com.au. Thank you, and thanks, Tim.
Thanks.